Hello and welcome to the Millen Sharma Show. I'm your host Millen, and let's just say if you thought that 2021 would be much more of a chill, relaxed year, you'd be wrong for now. We'll see in February, but for now, you'd be wrong because right here, think about this. GameStop, if you haven't heard about it, it's pretty insane what's going on between GameStop against Wall Street. There's a battle going on there. Billions of dollars at stake. I mean, all these really huge factors going on. So it's very complicated, so I try to find a very simple article to explain in layman's terms what is going on. Because as a person, as myself and many other people who are not really in tune with the financial world that's has so many moving parts to it, I found a fantastic article on Polygon.com, and it's titled GameStop's Stock Market Explosion Explained. And I'll link this below. An explanation of Reddit's war with Wall Street institutions. So this is very interesting. How could a Reddit, which is basically a blogging hosting site, be at war with Wall Street institutions, which are probably one of the most powerful, if not the most powerful institutions in the United States of America? Well, let's get into it right now. American stock markets are in a lather. Little guy investors are supposedly catering billion-dollar hedge funds. So Reddit, social media, and now even Elon Musk are involved. And somehow this is all for GameStop, the beleaguered video games retailer notorious for giving gamers pennies on the dollar for their used software. So they're pretty innocent right here. Like GameStop is just known for video games, purchasing video games or software. Nothing too major there. Like pretty simple things. But wait, you'll see there's more. It's very hard to recap what is going on with GME, the Tinker Simple that has become a hashtag because the news in a volatile stock market changes instant to instant. It's always changing. It's very difficult to keep up with, obviously, with stock numbers always rising, going up and down, all sorts of things. We'll try anyway. The most important thing to understand about GameStop in short selling is that this is now a very high-stakes gambling table with theoretically infinite losses that, for some big players, are becoming very real. And this is where we get into the Wall Street portion of the article right here. And even some politics is involved here. Because it says right here that Biden's economic team, Biden, the president of the United States, the most powerful man pretty much that holds a lot of political power in the U.S., and the U.S. Treasury Secretary Janet Yellen are, quote, monitoring the situation, according to White House Press Secretary Jen Psaki. I believe that's how you pronounce her last name, but I'll have to check that out later on. So this is a quote from the press secretary. She said, quote, "Our economic team, including Secretary Yellen and others, are monitoring the situation. It's a good reminder, though, that the stock market isn't the only measure of the health of our economy." All right, so let's see. Why is GameStop's stock price so high? Why did this jump from basically a neutral, very steady position to skyrocketing? Why is that the case? GameStop's share price, which closed Tuesday at $147.98. It closed that on Tuesday. And then the next day, it says in parentheses, the next day it went over $300. So it's skyrocketing. So this isn't any reflection of the health or value of GameStop. It's not. It's a reflection of a war between retail investors, which is basically regular people, normal people, individual day traders, and a war between retail investors like normal people and institutional investors, which is basically like the big Wall Street firms, the most powerful institutions in the U.S. Hedge funds, supposedly the professionals, have been betting against GameStop's stock using a trading technique called short selling. Day traders organizing under the subreddit are holding onto the shares of GameStop that they own, despite skyrocketing values that have made some of them millions of dollars on paper to stick it to the hedge funds. So obviously that's the battle going on there. Wow. So the Wall Street Bets Reddit subreddit is basically holding on to the shares of GameStop that they own despite the skyrocketing values, which basically they're sticking it to the hedge funds by not selling it. That's what it looks like. I could be wrong, but that's my interpretation of that. The battle began in earnest last week when the subreddit Wall Street Bets realized that its users who had bought into the stock when the supposed smart money was shortening it effectively control the supply of GameStop shares in circulation. So it seemed like normal people had control, effective control of the supply of GameStop shares. That's very important to keep that in mind. Now the banks need to buy that stock to cover the obligations of the short sell bet that they have made. But here's the kicker right here. The Redditors are refusing to sell. They're refusing to give the Wall Street institutions the higher ground right here. And that's what's really causing all this ruckus right now. The fact that they're refusing to sell, even though their value is so high, is very... It doesn't seem like... I'm not a huge intellectual person on stocks, but it doesn't seem that logical. So it seems like they're really sticking it to the big-time brokers on Wall Street. But let's continue. So, what is short selling? Let's find out. So, basically here's a dubbed down analogy of it. So, GME short squeeze explained nicely. So, let's say a snake is the Melvin Capital, and then the apes are retail investors. Okay. The group of apes in this situation is a chaotic group of investors organized under the Wall Street Bets subreddit, which counts more than 2 million subscribers. Last week, one of them realized that GameStop was in a negative float position. This means that the number of shorted shares, that is, the shares loaned to investors that must be eventually returned, was actually greater than the number of shares available to trade. I'm going to repeat that. Let's see. So the number of shortened shares, that is, the shares loaned to investors that must be eventually returned, was actually greater than the number of shares available to trade for. Very fascinating. So let's see. This is a quote by somebody. There's likely not an original GameStop issued share left on the market, the user wrote. Wow. The shares that you, me, and another user own are the shorted share. There's no way that short sellers can get themselves out of it. They're only going to be buying back their shorted shares, which, since they are above 100%, there's no way to do that unless institutions sell off everything they own into the open market. Excuse me. Yeah, I'm in a college dorm right now, so. In other words, the longer folks at the Wall Street Bets subreddit hold on to theirs to GameStop stocks, the higher the price goes. So if they're holding on to the stock and they're not selling it, they're holding on to it. 2 million people are subscribed to this subreddit. So I'm not saying 2 million people own the stock, or bought the stock, but if they're holding on to it, the price is skyrocketing. It's going up. That's why it went from like around $100 on Tuesday to Wednesday being over $300. So obviously this is very bad for people on Wall Street. That's my interpretation of it right now. Let's continue. So, does GameStop itself have anything to do with this? So, do they have anything to do with this? And the answer is no, they don't, because this was kind of orchestrated on Reddit, I believe. So, the company's last communication with investors was on January 11th, so pretty long time ago, on its 2020 holiday sales results. On the same day, however, GameStop announced that Ryan Cohen, a well-known investor who bought a 10% stake in the company last fall, had joined the board of directors along with 2 of his allies. So that's a pretty big influence, this guy right here. This caused the initial jump in GameStop's share price, as Cohen in November wrote a scathing "get your crap together" letter to the company's board. So basically, he wanted to rehaul GameStop right there. Little guy traders loved it, viewing Cohen as their savior, pretty much. Investment banks thought their amateur counterparts were due for a bath and bet accordingly. So, and here's the part where it gets really interesting. Did a $1 billion hedge fund actually go out of business over GameStop? Because you're seeing like all these headlines, like this company might be losing billions of dollars here and there, but did they actually go out of business? That's the question right there. And that answer is no, they did not. But Melvin Capital, the fund in question, did take a huge loss when it closed out its short position, CNBC reported. So this is why, and hopefully they talk about Robinhood, which took action to stop traders from buying, I believe. So, and there's like a class action lawsuit against them, but I'll get into that later on. But basically the main point is Melvin Capital did lose a lot of money when it closed out its short position on Wednesday. CNBC could not confirm the size of the loss Melvin Capital actually took, but noted that the company took on a $2.75 billion cash infusion from two investment banks to keep itself solvent. So obviously that tells you a lot right there. Even though we don't know the exact amount of money they lost, obviously $2.75 billion in cash infusion doesn't just come out of thin air. That's a lot of money right there. Gabe Plotkin, Melvin's manager, told CNBC that speculation the hedge fund would file for bankruptcy is false. Okay, that's fascinating. Very interesting. So, let's see. How much money did people actually make with this? Because you're seeing a lot of times people, the really big Wall Street funds actually losing money, and did people actually make a lot of money with this? Did the people that bought the Reddit, or did the Reddit users that bought GameStop stocks, did they make a lot of money? That's the question it's asking. So it seems like the answer is no here. We don't really say yes or no, but it says that this is all paper wealth. So it fluctuates wildly. So it's not really a confirmed source of income. So let's see. The trading on GameStop, by the way, on Tuesday, it was the most traded security in the world, creating about $2 billion in wealth. Most of it for Cohen and the company's two other biggest shareholders. That's unbelievable. So Wall Street Bets Redditors, however, have bragged that their portfolios have skyrocketed into seven-figure territory. So that's excellent. Realizing these gains, of course, would require someone to liquidate their shares. GameStop's Cohen is, by definition, in this for the long haul. Obviously, he's the director on the board of directors for GameStop, so he's really invested in this. He bought in to shape the company's direction and would lose the power if he sold out. So he's not going to sell that, looks like, most likely. And the Redditors are holding on to their shares for reckless YOLO glee, promising to see the stock price soar to the moon, Mars, or other celestial ports of call. So clearly they're just, I guess, doing this for fun to try to cause some chaos. That's my guess, because it does not point out that they are making any money per se. So, at least according to this article, maybe they have, but it doesn't seem like that. It seems like it's more like a YOLO, you only live once kind of attitude with these stocks. So let's see. So how does this end pretty much? What is the end game in all this? So short squeezes are a risk of short selling, and one that institutional investors are prepared to face. But their assumptions are based on normal investor behavior, and what's happening right now is anything but normal. Usually a share price would reach a too good to refuse level, and there would be a run to cash in on it. While some people would make a lot of money and others would lose big, the stock will return to a more normal reflection of the company's true value and health. So basically, it's not worth heavily relying on the GameStop stock, because eventually, yes, like if they're making a lot, if the value keeps going up and up and skyrocketing, eventually, according to this article, the stock will return to a more normal reflection of the company's true value and health. So keep that in mind. But the meme stock, you put meme in here. This is great. But the meme stock punters of Reddit are refusing pretty much every offer. So they're refusing to be basically sell, which they've stated that clearly, the YOLO attitude lifestyle. Moreover, they're turning their attention to other shorted stocks where they can hurt investment bankers and hedge funds. Okay. So, again, they're trying to hurt the investment bankers and the hedge funds, the really big guys in the market. And these people include, actually, it says the primary targets for them is AMC Theaters, BlackBerry, and Bed and Bath & Beyond. I guess that's who they're targeting. So that's pretty much that. And then that's pretty much the Polygon article. Read that in depth for you guys that want to get a very clear image or picture of what's going on, because it's very fascinating. But if I go to this Wall Street Journal article, it's titled GameStop Stock, Reddit, and Robinhood, What You Need to Know. This article goes into what action that Robinhood took. So what Robinhood, which is a popular trading application, they actually restricted access. This is according to this article right here. They restricted access to trading volatile stocks and options to meet increased deposit requirements from clearinghouses. Okay, let's see. So in an interview Thursday, Robinhood chief executive Vlad Tenev explained that Robinhood saw an unprecedented increase in its deposit requirements by restricting investors' ability to purchase shares in GameStop. So they restricted them. People could even purchase shares in GameStop. And 12 other companies, the online trading platforms, tried to limit future increases in those requirements. And of course, when you're limiting the ability to purchase and stocks and make these investments, of course, the customers are not going to be happy about it. So it says right here, Robin customers were not happy with the restrictions. And they weren't even happy, and then this is what I mentioned earlier. A group of individual investors actually filed a class action complaint against the company Thursday, alleging it, quote, deprived their customers of the ability to use their service, as well as potential gains from trading for no legitimate reason, because it didn't seem like they gave a legitimate reason. Now, I didn't watch the interview, so maybe that I'm not being fully open about that, but that's what their claim is. So by Friday, Robinhood actually did loosen the stock restrictions. However, they actually tightened it later in the day. So they're like, "Oh, we'll give you more access to trading stocks and buying them, but only to tighten them back and not being able to do that anymore." Very, very sneaky. Users are allowed to buy a maximum number of 1 share and 5 options contracts for GameStop. So I guess they can purchase GameStop. That's what it looks like right now. I believe that it appears that they can purchase GameStop, but it's restricted. They cannot do as much as they would like. That's what it seems like. So, yeah, that's... Let's see what Wall Street is saying about this, because this is very fascinating. Several high-flying hedge funds with short books or bets against companies are suffering double-digit losses in the volatile market, including Melvin Capital Management. That was a really big one that Redditors were targeting. So Melvin Capital Management, there's others that include Maple Lane Capital, Candlestick Capital Management. There's much more. Billionaire investor Cohen's .72 Asset Management. Oh, looks like he did lose money then. Uh-oh. Online brokerages have struggled with technical issues and service disruptions amid the frenetic trading. Some amateur investors on social media platforms have attacked Wall Street pros online, lobbying insults and threats on Reddit, Twitter, Discord, and Facebook. Short sellers are no strangers to criticism, but the social media users are sharing personal information, hacking social accounts, and texting family members. So that's going a little bit too far, in my opinion. I mean, that's kind of crazy. But it's crazy what people will do for money and all this stuff. It's with power. Very unbelievable. Even short seller Andrew Left, a target of internet attacks, said he would discontinue sending short seller reports. Wow. When we started Citron, I guess this is company Citron, it was to be against the establishment. We've actually become the establishment, Mr. Left said in a video. I guess that's why the Redditors are targeting him so much. And so, having knowing the scope of all of this, let's dive into the politics of it, because of course politics is embedded in all of this. I mean, the Biden administration, the chair of the Treasury Secretary, Federal Reserve Chair. I mean, all these people have a huge, pretty big influence in financial rules and regulations in the Wall Street and the financial world, pretty much. So what are politicians saying about this? Well, this is something. And we talk about unity and Republicans and Democrats being unified. Of course, you don't see that too often, but if you check this out, like Alexandria Ocasio-Cortez, a very, very prominent, if you guys don't know her, you will definitely know her by the next couple of years, because Democrats have the majority in the House and the Senate as of right now for the next couple of years. And AOC called out Robinhood in a tweet for blocking retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit. So, of course, she's saying that Robinhood should not be allowed to regulate people from purchasing stock, because the hedge fund people can do it anyways. They can do whatever they want, but the regular normal people like you and I, we can't. And this is where the unity is so great to see some Republicans and Democrats actually agree with each other right here. Because Senator Ted Cruz actually tweeted his support and actually his basically agreeing with Representative AOC, Alexandria Ocasio-Cortez. And let's see, even Senator Pat Toomey, who's retiring soon, a Republican senator from Pennsylvania, and he's a part of the banking panel, told reporters on Capitol Hill that he is disturbed that a platform would suddenly freeze out retail investors who are simply exercising their right to make a purchase. I mean, this is something that really Republicans, Democrats, Independents, liberals, conservatives, everybody on the political spectrum should be against. They should be against the unnecessary restriction, in my opinion, of restricting retail investors like you and I that are simply exercising our right to do whatever we like with our money. But hedge funds, they don't have any restrictions. They can do whatever they please. So it's good to see Republicans and Democrats agreeing with that. And you can see Representative Maxine Waters, Senator Elizabeth Warren, Senator Sherrod Brown, all of them pretty much agreeing that it's not a good thing to limit the trading of retail investors, limiting their ability to trade for stocks. So this is all from the Wall Street Journal article. I will link that below as well. And I want to thank you guys for watching. Please like, share, comment if you enjoyed this. Share with your friends. Like, if they don't know what's really going on with this, because it can be very confusing, please send this video. Please just share it, do whatever you'd like with it. And thank you so much for watching. You can check my channel out. You can check the bio. You can watch my episodes on Mel Sharma Show, Spotify, Apple Podcasts, and much, much more. So thank you so much for listening, and have a fantastic day.